The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour on this, all of TFNN.com. And it's an interesting day out here. We've had a little bit of action. I mean, a tiny bit of action. And I know everybody's kind of frustrated with these narrow trading ranges. And, of course, the ball always looks like it's going to bounce one way and bounces the other. And it's been rather frustrating. Today, we opened up about 5 points higher in the first couple of minutes. We're off 3 points on the S&P cash at 2098, 1.7 billion shares. So, again, we made another high at 2107 with a very light volume. And that's been the key of this week. Starting tomorrow, we're going to start getting some earnings. Those earnings are going to go on to probably Wednesday before I suspect that the market really reacts to them. So we've got a couple of days. I'm not surprised that we're seeing a little bit of selling before this. Of course, my theory is that a lot of these first earners that didn't come off as bad earnings in the last quarter, in the last cycle, are going to basically have a huge taste of the stronger dollar this time. And most of the people in the market are looking at it. What we do have is inflation on stock prices. That is, the price-earnings ratios are going down while prices continue to go up. This is, of course, a byproduct of the Fed easing. That is artificial inflation, especially in liquid assets. And the thought is, of course, that there is a put under the market because of it. My belief is that eventually the markets are always bigger than any single participant, even the Fed and even the Treasury. Eventually it'll all catch up. Part of that frustration led me to do something, and we're going to premiere a new video on TFNN here in the second segment, so hang on for that. But I think you'll all enjoy it, and maybe you'll probably feel my frustration, as many others have voiced in the den, about what's going on in our financial policy. As always, you can call me at 877-927-6648 and email me at path@tfnn.com. I'll try to check those in the second segment. And in the meantime, we always like to start off with just a little bit of history.
And it's all just a little bit of history repeating.
As the market absorbs the news of, well, that's even wrong there, isn't it? I don't know why this thing is not accepting my dates correctly. I've got to go back and fix them. But it's not 1890, it's 1945. On this day, it's the day after President Franklin Roosevelt's death, and the Dow Jones Industrial raises nearly 1% to close at 159.75. And isn't that just like the average move in a day now? Can you imagine that? But of course, by 1945, any day that you were up 1% was a big day. Coming out of the Big Depression, the war starting to finally wind down in Germany, and of course heat up in Japan. I can imagine that everybody looked at 1% and thought that it was good. Now, most people thought that because he died that the next president would be the opposite party, and maybe that was the reason for it bouncing 1%. But if you read the articles of that day, that kind of was it. I mean, maybe they were just ready for a change that would not come. Dewey beats Truman. But I guess probably if I said that in front of anybody that graduated from high school today, they'd have no idea what I'm talking about. I ask people historical questions at the Burger King and McDonald's through the drive-through window just to see if any of them understand it. And of course, none of them do. But I do digress. Anyway, we're going to be talking about some other things out here in the markets. I've got to get my charts up, and then of course, in the second segment, we'll have some fun at the expense of those that are making life tough for us today. And I'll bring that up. Anyway, that's in the second segment. In the meantime, we can look at some of the stocks that I've been looking at and watching and see how they react today. I think we talked about this one on Thursday. Maybe it was on Friday. I'm starting to lose my mind. There's a few stocks that are up here at these highs that aren't looking all that bad, but are just slightly light on volume. Anything more than 10% starts to be rather predictive. And of course, mostly what I look at is about 50%. There just aren't that many stocks out there that are giving fairly good signals these days. I like to look at stocks that are either testing highs or lows on 50% volume. Sorry, folks, this market is so wrapped so tightly. Not many of those out there. I wanted to see how Cirrus Logic reacted, though. Nice doji on Friday, and of course, 10% light on volume. Basically went 4 cents higher than the March 16th high. That had 1 million shares. Got into it yesterday, or actually Friday, with 900,000 shares. But a little doji out there, pretty good signal, and a little pullback today, but no volume. So it depends on what we're looking at here. One's on lighter volume is AmTrust Financial. This is a stock that could break out, but again, a lighter volume up here. When you look at this, it's AFSI, if you're not familiar with this stock. December 15th hit its high at $59.31. 520,000 shares on that day. We got into it on Friday, reversed back in and closed below that day. Did go, 40 cents higher, and kind of a middling, no volume day out here too. One of the other stocks that is playing around these highs right now is the Deluxe Corporation. I thought that they'd left when checking went out of vogue. I'm pretty sure this is the same company, Deluxe, DLX. Check writing, not so much these days, right? You don't need to print your checks. You can print them on your laser printer. And, what else can you say out here? February 24th, $69.46 on that February 24th day. Not a whole lot of volume, but even lighter on Friday. Came in with 150,000 shares and has popped back into this trading range. And probably not a stock that really jumps to mind, but for a lot of these stocks with a light volume, we are getting some signals. I think we talked about this on Friday, maybe Thursday, and that was some of these hotel stocks look like they were at least starting to try to bottom. Hotels, or host hotels, I had a ton of receipts from these guys throughout the years because, of course, if you know who they are, if you've ever traveled, you'll see all these receipts, and they always had host on them. And I always thought, well, they didn't get very inventive with the name until I found out that actually it was one big corporation that ran all of these, especially at trade shows and the convention centers. The host hotels and resorts property people run them all. But kind of an interesting and really good looking, finally a good looking low in this. And what I'm looking at is the high volume low of $19.94 on October 15th. Hit 18 million shares, got into it, pierced it on March 6th with 13 million shares, and then came by and hit this with 6.8 million shares on April 9th. Friday was kind of a nothing day. Your pop up here on light volume, but that's not uncommon for stocks that exhibit this pattern. This is the kind of pattern I like to buy, and the opposite of it, exactly what I like to sell. A lot of times you don't get three tests. This one had a nice trading range out here. But, am I going to buy a stock to get a buck or two out of it for a $20 stock? No, I want probably $5 out of it. But the pattern is probably more than anything else that I'm always interested in. Other things of interest out here. What else we have? Norwegian Cruise Line. This one, actually one of the few out here giving a extremely good heads up, and that was probably, you got to think that these cruise lines earnings have to be seasonal somewhat, right? Everybody coming through winter. I imagine they'll probably do great next winter too, because everybody come about next summer, September, are going to think, you know what? Last winter was miserable, and I'm going to get out of here and go to some tropical island, at least for a week or so, and get out of this stuff. And so you had a nice little pop up here on March 20th. You had 3.3 million shares. But let's go through the volume. You tried to go through it on the 30th, 1.3 million shares. Thursday, you had 788,000 shares, 428,000 shares, and you're back down today. No volume yet. But again, this is the patterns you want to be watching very close. If this market breaks, these are the ones that are going to probably have a lot of energy behind them to the downside. Another one that's in this kind of resort business and hotels and resorts that's making some good signals is the Six Flags Entertainment Corporation, SIX. I used to go to, I guess when I was a kid, go to Six Flags. And I thought it was interesting, kind of interesting. That creepy guy that was on their ads all the time bugged me. He was as creepy as the Burger King guy. I don't know if anybody's seen those ads. Australia in the winter, that's a pretty good idea. Anyway, Six Flags Entertainment. This one had a nice spike high of 2 million shares on February 19th. Hit $49 even. We got over that in last week at $49.29, but only 630,000 shares. Since then, kind of been going sideways, but 600,000 shares, 500,000 shares, 400,000 shares on Friday, and today 180,000 shares. Starting to move back down light. And why I'm saying most of these stocks look like if the market's going to break, kind of make me think that Wednesday is going to be the day. In other news and snooze going on out here, Netflix was up fairly strong, and I have a feeling if you didn't hear about it in FLX, it was upgraded, but I think is kind of maybe a little bit of the upgrade, and maybe that HBO had the first 4 or 5 episodes of Game of Thrones leaked out there, and it's actually broken the torrents and the internet sites and the pirate sites because everybody's been all over it. It was the #1 pirated thing of all time for those sites, and I'm wondering if a lot of people are just thinking that maybe the money isn't on the big front end. Maybe it's a little bit more on the back end, but boy, you got a 3-gap play setting up at Netflix. I'm watching it and watching the volume. I'll have to keep an eye on this. I'd love for this gap to come back filled. We'll be back with our premiere in the next segment.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I know a lot of people have sat there waiting for the FOMC meetings and waiting for the FOMC to come out with the reports. And it's getting kind of frustrating and kind of long. And I think last week I had an epiphany when I thought, is she going to raise or is she going to let it go now? And I think we can roll it right now.
Hey, Janet Yellen, you got to let me know. Gonna raise or let it go. You say zero rates are mine. Is it QE for all time? So you got to let me know. 'Cause the minutes do not show. It's always ease, ease, ease. Grabbing bears are on their knees. One day it's blue sky and it's black. So if you want me off your back, well come on and let me know. 'Cause employment's gonna blow. Gonna raise or let it go now. Gonna raise or let it go now. If you raise there'll be trouble. And if you don't, it will be double. So come on and let me know. Disinflation bugging me. You want money to be free. There are bubbles everywhere. Do you really even care? So come on and let me know. Don't blame it on the snow.
And that's it. And if you want a link to it and you didn't get to see all the videos, you can email me at path@tfnn.com or go to the front page of TFNN. And I think they've got something set up, but I haven't been able to see it. Thanks for all the input of the people, including Andy Heck, who gave me a little constructive criticism. And Andy and I are probably going to do a few more things that are a little fun like this outside of the standard market. So if you go to the YouTube link, which I'll put in the den, but you can get from me if you want to email me at path@tfnn.com. Make sure that you subscribe to our channel, and we'll have a few things for you in the new future. Have a few questions out here. Who sang it? I hired a guy who, strangely enough, was from some Nordic country, and he's on a website that does stuff. I wrote all the music, the lyrics, and hired the music and the singing done. He did a great job. So I liked it. I did all the video editing and put all that stuff together. Since I designed video editors, I should have been able to at least crank out one edit. But I think, I did a whole bunch of movies in the 90s for products, kind of documentaries, examples, that kind of stuff, and worked on a lot of movies. But it's some things come back to each other. I had to learn the editor in a pinch. Things have changed a lot since I was designing video editors of my own, but mostly on the hardware side, not so much on the software side. But it was nice. I hope everybody enjoyed it. And you can give me your feedback at path@tfnn.com or post something on the den. And, of course, you can put nice comments on my YouTube channel there and subscribe. And we'll put up new stuff from time to time. Again, thanks, everybody. Well, we got about a minute left here, and we're going to get back to the market, which is already in progress over most of TFNN. We were talking about Netflix, and, you've got some nice gaps. The question is which gaps you want to use. I'm thinking you've got, a kind of a nice pattern out here that looks, again, like Netflix wants to do some kind of blow off top. A lot of volume today. I think they caught a lot of people on the wrong side of the short end of the stick on this one. But we'll have to see how this plays out. Gave back about 485 to 484. I guess that's not as bad as it. Well, what is that? No, that's 478. Gave a little bit back. But anyway, upgrade, maybe just a little short squeeze. Time to stick it to them. We'll keep an eye on it. My guess is, though, you want to give this thing 3 days before thinking it's going to pull back. I have a feeling a lot of people were short, and they're going to make sure that they close them out on margin, if at all possible. We'll be back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, who's looking at Netflix out here? A lot of volume, give it a little bit back out here, but maybe just a little bit of exhaustion after all this move. It went from 409.25 all the way up to 485 today. Even if you're bullish on this thing, I think you probably have to say, it came $1.50 to that previous high on February 26th. So what else are we looking for out there? In the meantime, we're off 5 points on the S&P cash, 1.8 billion shares on the New York Consolidated Tape. Again, if you're thinking we're going to be breaking out and going much higher, I'm looking for volume in the neighborhood of 4 to 4.5 billion shares. We've been getting 3.2 to about 2.8 billion shares on the dailies. And if you're not familiar, you're new to the show, the New York Consolidated Tape is the American Exchange, the New York Stock Exchange, and all the stocks also traded on the electronic commerce networks. So it is every stock traded, not just those on the floor of the NYSE. Just you need to make sure to compare apples and oranges on that. But it's neat. So what else we have? Oh, Andy Heck, my friend out here, has got a ton of new articles on Seeking Alpha, so you may want to check those out. Oil products, coffee, shifting term structure in oil. Brent spread is telling us about oil prices. Natural gas falls off the edge of the cliff. Precious metals and ominous signs. He's kind of bearish on gold. I'm kind of agnostic on it at best. Again, The one thing that you see is huge moves in gold when the markets go sideways. I'm probably not a good short-term player in gold. I'm a much better long-term player in gold. And I think maybe there'll be some possibilities. But right now, I'm not really surprised we're seeing the markets kind of move around a little bit. But I don't know what else you can say. Yeah, we've got what's gold at here. Off of $5, it's back under $1,200, $11.99.40. Now, I've talked about it for some time to time, and one of the things that got me interested in doing that video was also the idea that the Fed truly does want us to see the market go sideways as long as possible. I don't think it's capable of them doing it, because eventually longs who just see their stock going sideways will eventually all peel off if they can't make any more quick money, especially the fast money crowd. But I think Arian's got it right. We'll play that for a second.
So what we need is for markets to consolidate in the middle. Instead, markets go one way or the other. So when we have really good days, that actually makes Fed officials nervous, right?
Because really good days in the markets, you mean?
Really good days in the markets because it takes prices beyond what's justified by fundamentals. They worry about excessive risk taking.
Well,
they worry
don't like
about
down
financial
days either.
And they don't like down days either, right? So what we need is a period of consolidation. The trouble is that the markets won't stay in the middle. The markets will either be discouraged by very low rates and go into high risk taking, or will switch the other way around.
And the reason for that is that markets are bipolar. And certainly a lot of people want it to either things are good getting better or bad getting worse. And if they're flat, that's probably the worst things that a trader can see. But my guess is that, we've got the Fed, we've got everybody playing with just about every control in the government and in the economies, in the Treasury, in the Feds to make sure this market doesn't go anywhere fast. Right now, I think that they're spending most of their time going after that poor old dollar. What has it ever done to anybody? It's only bought them good and wonderful things, hadn't it? At least I think so. But anyway, for the dollar, we're up 19 cents on the dollar index today, 99.53, which isn't a whole lot. We pushed up to 99.99 again today. I don't know if that's a bad tick or if that's real. I just noticed that. But to me, it's probably not a big deal. My guess is we're going to consolidate out around here, and one day we're just going to wake up and it's going to break 100, and a lot of people are going to freak out. And maybe I need to get that freak out song. Freak out. Anyway, it is going to be that. And I think Andy's been talking about the dollar going to parity with the euro. Looks a lot closer than it did just a week ago or 2 weeks ago. It just seems like you wake up and the dollar's taken off like a rocket. But I do wander away from my points from occasionally. Petrobras. This thing has been slowly moving up, and I don't know if it's any better off financially. Certainly it's better off with volume. This thing did kind of make a better low out here with lighter volume, pop back into this trading range. The question continues to be just how bad the corruption was when they restate their books. I don't know exactly the inside skinny on that. What I can tell you is today we did break through rather substantially through this December 23rd high at $7.81 that had 30 million shares. Just a nickel underneath that was the January 22nd high with 37 million shares. Today we're out here with 81 million shares. And of course, Bloomberg is reporting that the company might divest assets to fund expenditures and pay debts and not just go down the tubes quietly, or as the one English author said, quietly into that good night. But looks like they're going to, it's the GE policy. We'll sell everything that didn't nail down and will look good, at least for in the short term in the market, while everybody distributes our stock as quickly as they can. If anybody has any questions in the den, they can always post them. They can email me at path@tfnn.com, or they can call me at 877-927-6648. What else do we have out here? SYMC. Another one out here moving today. Semantic. This one kind of boy, talk about a nasty reversal out here of Friday's move. And what do we have? There is anticipation of a 60 Minutes report coming out on Semantic. Looks like 60 Minutes is the place to be if you want to make trades before they come out, whether it's Lumber Liquidators or Semantic. But certainly it looks, it's never good when you're on 60 Minutes. It's always, they're coming for you. I don't think anybody should ever open the door or act like they're home if the 60 Minutes crowd comes looking for you. I think if you were doing something bad, you'd know at least what the faces are of all those reporters and run like hell if they showed up. And that's what we've got in a nice trading gap down for in Semantic. Volume is not near as what it was on Friday, but I don't think it matters. You do have an untested low out here. It isn't huge. Let's take a little bigger look out here at this thing. In the scheme of things, but what you do have is the higher volume low that's never been tested from October 13th at $21.66. That had 7.7 million shares. You also have a gap at 21.5. And I don't know. I'm not a big fan of Semantics. Spyware and security software. I'm wondering if they're not going to really get to them on how they make their money with the bloatware and some of the trickery that seems to be used on their clients. And I have a feeling that's probably what a lot of people today think is actually happening. But we move on from that. GE's pulling back a little bit from Friday. Again, the financial engineering makes good things in life. They did break through, albeit toughly, the December 31st high at $28.09 with 30 million shares with 350 million shares on Friday. Today, a little bit lower back here on the volume. I was talking to Tom O'Brien during the break on Friday's Tech Insider. Just if you look at this as a long-term chart, what a dog this thing is. And I just don't know why people still own this thing. I think we were looking at 10-year charts or something, and this thing was just, it was, when you just go back and look at it, it's, does it got some movements? Yeah, but I don't know if anybody could ever make a living out of it. Just looks like the stock that everybody wants to have in their portfolio to take up some room. Other things, what else we have? GE, we got a big mover out here. CLVS was upgraded today, and I think like a lot of these stocks had some people thinking that they wanted to be to the short side on this one, and of course rather dangerous to be short any biotech. Clovis Oncology, CLVS, nice pop out here, certainly blew through the previous March 17th high at $73.46 with 2.2 million shares already. And I think a little of this is that the drug business is doing good, but I think a lot of people were looking at the IBB and getting a little short. And, to tell you the truth, you're getting there. And it doesn't, to tell you the truth, the IBB as a short does not look all that bad. You had a gap down. That gap happened with some okay volume, but you really had the volume come back in on the 25th with the energy on the way down. This thing kind of moved back up, and actually this is where you really want to start looking at the opportunity for this to either break the 3x3 displaced moving average and or underneath a 9-day moving average. Right now, I don't think that there's a play on this one. But, you're basically talking about you'd almost be better off of seeing a move lower before you bite on this one instead of trying to anticipate the move on it. It is a little tough. Okay. Just have a quick message coming in over the transom that there is a link up under breaking news for that video, too, if you want to go to the front page of TFNN and checking it out. And have a little fun today why the market's not doing a whole lot for us. Either way, 2098. So we're off 3 points on the S&P cash, 1.87 billion shares, and the rest is a snorers fest. Even gold and all the other stuff that normally give us lots of fun and excitement. Not a whole lot. Let's go back to our list of stuff that's moving out here. CCJ, talk about one that's finally giving us a little help. With everybody and their dog getting ready to make a nuclear bomb in the Mideast and probably the rest of the world now, because, of course, you don't want to be the only country out there without a nuclear bomb, since I guess the idea is that everybody's going to get one and we're going to allow it. You got to think that maybe some of these companies are going to do a little bit better. CCJ had a nice little pop out here. It was upgraded. I don't think this thing's quite out of the woods. I'd like to see a low volume test back here at $13.62. Let me take off the moving average. This thing's just in a lower range, but it's certainly in one of these asymmetrical triangles, as I would say half the market certainly is. That is lower highs and higher lows as this thing continues to narrow. This would be the kind of the first move, and I would think that you could get back to 1363. Of course, they're going to be going up against the Russians who are selling yellow cake, the South Africans who will be selling yellow cake, and a lot of other people. Of course, Cameco is a Canadian company, and they've got their own big, giant uranium mine also. But what else can you say? Another one moving out here is SINA, S-I-N-A. We got enough time? Yeah, we do, before this break. This thing had a nice little move, getting a pullback on that today. China is considering a shutdown of the company's news service if the censorship does not improve. As I've talked ad nauseum about China stocks and basically are U.S. companies that think that they can do business over there, they'll always find something. Any dime that seems to make its way back to the United States is a bad thing. And the Chinese will tend to find it. Of course, it had some nice pop-up last week. Now, this isn't into this, but we've seen Google leave. We're going to probably see a bunch of other companies leave this year out of China as China gets much more restrictive. And, of course, some of these companies had their hands in the cookie jar paying people off, as I'm sure the only way you can do business in China is pay people off. But they're still in that whole issue of paying people off and what it does. But I tell you what, any company that is banking on China that is U.S. based or not based in China, I find problematic at best. And the China companies, I think, themselves, I find the books to probably be I can even say it, gently roasted or completely burnt. But there's going to be some black on the edges of all those accounting issues that we find in China, I think, going on, as for the most part, they have an economy with the truth when it comes to dollars or yen or drachmas or anything else. We'll be back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we are back, and we're going to look at a couple of stocks before we close out the end of the day. And again, you can always email me at path@tfnn.com. Been answering some emails here during the break. Just looking at the price of these SSDs coming down. Here's a 480 gigabyte SanDisk Extreme Pro 2.5 SSD with a 10-year warranty for $200. My God, 10 years ago, I would have given $10,000 for that. $200 today. What can you say? Other stocks that have moved out here before we're going to get to the last one, TCK. And this one's kind of coming back. You got the high volume low out 1045 that's still hanging out here. This is Tech Resources, by the way. Volume a little light today, but you already kind of have the previous low out here on March 17th that had 3.4 million shares tested on the 2nd of April here on 4.7 million shares. You got 2.4 million shares, but it's kind of hanging out at these lows. You got that untested low at 1045, so I would imagine you'd want to be watching out for that too. FET, another one that's moving. What's the deal on this? Downgraded, hold, hard to say. Boldness and strategy at Heinz, Kraft, nothing else. Franklin Universal Trust. Oh, that should be FET. He typed incorrectly. To Forum Energy Technologies. Now, this one's kind of interesting. It broke out of its high, but it's kind of coming back into trading range again, which is, that's why I'm saying so many of these stocks are so frustrating out here. You've got the December 29th high at 2190 with 730,000 shares on Forum Energy Technologies. This thing came up with some decent volume, 1.3 million shares on the 9th of April. Of course, Friday you had 1.2 million shares. So you had all the volume in the world, and this thing kind of came right back in here. I guess that's the downgrade. I don't know a lot about these people. Let's take a quick look and see what they have to say. Forum Energy Technologies designs, manufactures, and distributes product to the oil and natural gas. And that's all you got to say, doesn't it? Forum Energy Technologies. Sounds like they make something. Drilling, subsea. Oh, and they're offshore drillers too. Ugh. They've got the plague. That's all you got to say. Offshore, anything else, natural gas, it's got the plague. The Black Death. It doesn't look bad almost as a short out here, actually. You've got an untested low back at $14.96. I don't short anything under $30 as a rule, so I probably wouldn't get into this. But, you got this nice move, very complex move back up into this high. This thing came back. The only thing is this volume out here that looks weak, but kind of tough for me to get too excited probably the rest of the summer in either the oil patch or the natural gas patch, either one. Nat gas looks like we're probably looking at something in the range of, midsummer before everything starts heating up. I know that we've got, theoretically, this thing could, I wouldn't want to be shorted because theoretically in this volume out here, even the volume we saw on Thursday was 11 million shares, is not what I would normally see out here on one that is just doing nothing. In fact, I'm looking for some kind of blowout low in natural gas, but my guess, we're going to get into June or July and the heat of the summer before we get it. But at some point, it's kind of like well poop. It can't go any lower. And that'll be time to act. In the meantime, hang on for Tom O'Brien. So when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.